In this video, I'm going to show you how to predict price, which will help you find trade ideas like this one. But first, we've got to go over a few concepts, and I'm just going to say this straight away that technical analysis on its own works, but if you want to make it more efficient and more better, then you want to add some other confluences in there, and that is either strength and weakness analysis, fundamental analysis, and so on and so forth. So I'm going to show you how you can do it without any of that information, and we're going to go with sort of looking at this euro US dollar chart first. Now you can see I've got a daily chart, a 3-minute time frame actually, which is position size or a time frame that I like to take positions on, and a 15-minute time frame. But ultimately, the important thing about how to predict price comes from a top-down analysis approach. It comes from what is the higher time frame doing, what are the lower time frames doing, or the mid-term time frames or medium-term time frames, and what are the lower time frames doing. So I've got a good example here on euro US dollar, but let's go understand a little bit about price action first. So I'm just going to narrow this down to one trading chart. I'm just going to maximize the screen here, and one thing I'm going to do actually before we carry on is delete all the drawing tools. Okay, I'm also going to take off the moving averages because they're not that important. It's just something that I like to use as a visual aid, so it's not important that you have to have moving averages on your charts at all. But it's important to figure out how price moves and how price works essentially. So really speaking, there are 3 different types of ways that the market will trade. Okay, you will either have a trading range, okay, where the market is moving between 2 points of resistance and support. Okay, and then the market kind of finds a balance between that point. You then have a downward trend, okay, where the market makes lower highs and lower lows. And what you typically find is that when price breaks through an area, it can find resistance at specific points, including highs and lows. And that's the same concept for a higher high, higher low situation in an upward trend. So you have these different types of scenarios here. Now our job as traders essentially is to form strategies and then trade them to the best of our abilities. And I like to form my strategies based off of 2 different market types, that is the range and that is the trend. Okay, so that's why it's important to understand how price moves. There are 3 different conditions, but within those conditions there are other sort of factors. So let's say this is a upward trend, and I'm just going to put a text box here and just say this is the daily time frame. Okay, so the daily time frame is making higher highs and higher lows. Now within that you'll have a trend. Okay, so you may say that this one here, and how I name them are either primary phases. Okay, so you can call almost like an extended phase in the market is primary / impulse leg. I call it an impulse leg. So what that means to me is that price is impulsing to the upside in a trend. The pullback phase is the secondary phase in the market. Okay, so I'm just going to put a secondary phase or pullback essentially. Okay, so this, if I just get rid of this for a second, there we go. So this is the daily time frame. We have a primary phase, impulsive phase, primary phase. Okay, now if I just use the brush tool here, within that phase you'll have certain things. So the 4-hour to hourly time frame on that phase will form higher highs and higher lows. Okay, we then come to the secondary or pullback phase in an upward trend, this example is, and the market will start to make lower lows and lower highs. We then transition back into the primary phase where the market will make higher highs and higher lows. So this gives us opportunities as traders, because if we can identify the higher time frame phase that the market is in, then it allows us to identify opportunities for when price could potentially turn back into a particular phase. You can trade both phases. There's no difference in trading both phases. I trade both phases all the time, but the problem is you're going to make more essentially, or the theory is you make more on trending moves. So the impulsive phase is where you're more likely to make more money, because those can often lead to further upside. If we're looking at a range point of view, I don't think it matters what time frame you're on. You shouldn't be looking to trade beyond the highs or the low. So your opportunities come at a high or low. If this is the daily time frame, let's say, and the market is trending, or sorry, is moving within a range on a daily time frame, okay, I only want to do business with the market if it's at the high of the range or the low of the range, full stop. I don't want to do any business in the middle, okay, because you are susceptible to being stopped out unnecessarily, okay. And when the market gets to these points, you can often see minor trends within that. So you may see like a double top form, and then the market trend to the downside, and then vice versa like this. So that might be your 15-minute or hourly time frame, or 4-hour time frame if this is a daily chart scenario, okay. So the important thing is to understand how this situation works really. And in a downtrend scenario, it's exactly the same. The market will make a trend on a lower time frame like this, okay, and that's what we want to be trying to follow. Now the important part is obviously where the market turns. I'm only interested in here, I'm only interested in here, I'm only interested in here, I'm only interested in here. You don't know when these points are necessarily going to come, but the market can give you clues as to where that will be. So in the uptrend example, you can see here the market makes a higher high. A higher low may occur at the previous high or the previous low. I prefer personally to trade at the previous low. The reason why I prefer to trade at previous lows and highs is because that gives me a better risk reward ratio back to the previous high. So let's just say in this example, I tried to go long here, target up there, and put my stop loss here. Your stop is in reach of price action there. If I was to put it down below the low, sometimes it can be a negative risk reward ratio, sometimes it can just be around about a 1-to-1. That's not what I'm looking for when I'm trading. I'm looking for positive risk reward ratios so that I can be wrong more than I'm right, essentially. So if I trade from the low with my stop loss below the lows, you can see that the risk reward, even though this is just a minor thing, a drawing, you can see it's increased. So that's what I'm trying to do there. Example on the range, if I try and trade inside the range, let's say here, and the safest place to put my stop loss is at the swing highs. Now with ranges can be difficult. Sometimes they don't come all the way to the bottom. Sometimes they just wick into it and then move away. So we've got to be considerate of that as well. So where is the optimal place to trade these? It's at the highs where you get a pattern on a lower time frame, trade into the low there, and vice versa. Okay, so that's what we have to understand. We have to understand that you have higher time frames where we can identify direction. So for instance here, impulsive phase or secondary phase, or are we in a range? We then use our lower time frames to apply technical analysis surrounding patterns. Those patterns can be all different things. You know, there are many patterns out there. What I would suggest to you before you even get into kind of the next part of the video is pause the video here, go and have a little look at the turning points in a market. And the way I do it, I start on a weekly, okay? Because like I said over here, understanding my conditions from a higher time frame can give me an advantage, okay? So if I'm looking at price action now, what does this tell you? Well, I have a high here. I have the market trying to make a new low. It then pulls back, it forms a lower high. So if I was reading price action now, I'd say impulse phase, or primary phase, retracement phase, secondary phase. What am I in now? I'm in a primary phase on the weekly time frame. Where is that going to bring price to? I like to look at previous highs and lows. The low here, for instance, maybe if we break that, could it come down to that low? Okay, we don't know if it's going to break it, obviously, but that is how I would be viewing this market right now. We're in a primary phase. In the primary phase, I want to be taking short positions on this downward trend forming. So if I look at that 4-hour daily time frame, I'm looking for those conditions where the market starts to turn. Now, as we understand sort of the three market conditions and the areas where you want to be looking for opportunities, whenever we come down to a lower time frame now, I want to be marking up key areas of support and resistance. Okay, now to me, highs and lows are an area of interest. The reason being is because if I was to tell you to pause the video and point at every area you would want to be in the market, you would say here, 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 here. And if we're going to look at it from the buy side, you want to be long here, 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 here. Okay, why is that? Because they're significant turning points in the market. You can see easily how you'd be able to make money at those conditions, right? So if I take them off for a second, the way we like to do it, like I said, let's go back up to the weekly time frame. Let's really break this down. I'm just going to delete all the drawings off as well. Feel free to go back into the video, screenshot that as you wish. And what we're going to do is we're going to actually almost make our charts bomb-proof. A former mentor of mine always said, make your charts bomb-proof. And we're going to do that using 3 different price action tools. We're going to use the sort of rectangle zones. Okay, so we're going to use these. We're going to use our horizontal lines, and we're going to use our trend lines. Okay, and that's going to help us build a bigger picture and understand where the market potentially is or where it's at. Okay, so first thing you can see, I've got this cursor highlighted here, okay, on the trading view charts. If you don't have access to trading view charts and you are on a MetaTrader terminal, if I just give me 1 second. If you're on a MetaTrader 5 terminal, all you need to do is hit the middle of your mouse and you'll get this cursor. Okay, it's absolutely the same. I'm just showing you on TradingView because it's easier to draw on. Okay, you've got rectangles, you've got lines and everything on MetaTrader up here. Okay. So looking at price action now, this is how I would build out my chart. First things first, I want to look at the most obvious areas, and you can get your cursor from the top half of the screen and just stop wherever you think there's a key point. I think there's a key point here, okay, around about that area there, and we'll come clean this up a little bit later, but that area there looks good. I'm scrolling down, this area to me looks pretty good. Scrolling down, that area to me looks pretty good. Scrolling down, that level looks good, and that level looks good. We don't have to go mad. We could go and put every single one on there, you know, but you're just going to flood your charts with lines. So I could go here, for instance. I could go here, for instance. You're just flooding your chart with lines. We don't need it. Price isn't necessarily there at the minute, so I can just take these ones off for now. The second thing I want to do, apply trend lines. Okay, now I'm not the biggest fan of trend lines. I'm openly admit that if you watch the channel regularly, but they can be important. Okay, so the way I look at trend lines is if price is making higher highs and higher lows, and I can see that we have a higher low that I can form from and a low, I can just basically use that and expand out. Now on TradingView, if you actually double click, you can come over to style and it will give you the idea of extending. So you want to extend the right line. Okay, I don't do that at the minute because of just how I have my tool set up, but I'm just going to show you an example of how I would do this. Okay, and then I want to look at the most obvious areas. Don't make it difficult. Most obvious areas. So that high to that high there, super obvious. That's my anchor, that's my formation point. Okay, so this is how we're going to treat these. Your first point is your anchor, your second point is your formation. Okay, here as well, if I grab on a trend line, I could look at that area to that area there, couldn't I? So I could put that high to that high, okay? And you want to make sure they kind of lock on a little bit there. Again, what is that? So that is my anchor point as well. I'm just going to put that down there. That is my formation, Okay, so I'm looking essentially to extend that trend line to the downside. Reason being is because what is it also showing me? It's showing me the direction of price, because the market is making lower highs, lower lows. So I've got that there. I could do them the opposite way. I could take a trend line from here to here. Okay, what is that showing me? Well, it's showing me that trend is actually breaking here, or support is being broken by price. Okay, I could make it a little bit better by coming to the previous low there, and you can see the market found support here, it breached it here. So again, this is why I don't like trend lines that much, but to make a sort of bomb-proof chart, you can include them. Okay, if you don't want to include them, or you don't think it's important, just come and take off the extension and just leave it there. Just leave it in the background. It might come in use in the future. So I've got my anchor formation point from a higher time frame. I've got my horizontal lines. Now you can add some rectangles. So I like to go from the wicks now. So the wick high to the body of the candlestick in here, wick to the body of the candlestick, and wick to the body of the candlestick. And again, this is going to all make sense in a little bit. Wick to the body of the candlestick. Here's somewhere that I like, and down here, just going to use that wick from there, and that body, that lowest body here. So that would be how I would set up my weekly chart. I would now come down to the daily chart. So I'll have a little look at the daily chart, and the daily chart's for refinement now. So you can see this one here, obviously big move. I'm going to leave the white dotted line, but I'm just going to move that up there. Similar to here, I'm going to do that, and similar to here, I'm going to move it down, and similar down here. Okay, just to refine it a little bit. Don't need to go into too much detail about that, but that is how I refine it. You can refine your trend lines here as well. If you think that they're not quite as accurate, you can come and do that, and you can refine those even further. Again, can you add any more technical analysis to this now? Can we add any more horizontal lines, or can we add any more zones? So definitely down here now, I like the idea of price in this zone. Okay, if I'm looking at price action right now, that zone up there can be pretty important as well, because it's swing highs. The zone that I pointed out previously in here, and I'm just going to follow the same technique, and I'm going to go all the way down into the 4-hour time frame. I'm just going to highlight all these areas here and refine them further. The reason why I'm doing this now is because, again, I've built up a picture of what's happening in the market. I understand from the weekly chart that the market is in a primary phase. I need to understand that that could lead to potential downside opportunities, and that can lead to opportunities in regards to selling the market, making money from the market. Now I tend to add a little bit more technical analysis to these, so I like to just draw in areas where the market has formed lows, because obviously as a day trader I can find opportunities by doing that. But essentially what I'm looking for is, if price makes a high on the 4-hour time frame, it moves, comes back into it, does that give me an opportunity to see that same sort of pressure that we saw recently? Okay, so in this case it does. Now if I go back to the 3 split here, okay, that's the wrong one. It is this one. So up here I can plot the daily chart. Okay, up here I can just leave it on the 4-hour time frame, and here I have the 15-minute time frame as well. Now what I can do is I can sync all these together. Okay, so if I just hit Control, select them all, right click, sync in layout, there you go. It's one job, synced all across the charts. I can see that here on my daily time frame. I can see the price action on a day-to-day basis. Here I can see the price action on a 4-hour, and here I can see my 15-minute time frame. Okay, so the 15-minute is where I make the decisions, like I said. So let's come and have a little look at what happened to price action up in this area here. Well, I can see that price came above those highs, and then it breached that low. Okay, so that's what I'm looking for, breach of that low, and you can see that the market then trades off to the downside here. We get that nice little bearish move. CPI data in the US drove prices to the downside. Now today, why was I looking at getting in short this market? Well, again, if you look at how the market reacts to previous highs and lows, that's something that I'm looking at. And I'm just going to drag this 4-hour one back over here. But essentially, looking at how the market moves, I can see that from a higher time frame, we are bearish. Daily is bearish, 4 hour is bearish. I'm looking to see, can that momentum continue to the upside? Now, if I just zoom in on this 4 hour, by the way, okay, where's the sort of high that you'd like to work with? It's that candlestick high, right? That is a high. So I'm just going to sink that into the layout. And you can see, look how price has reacted to that today. The market tried to breach it, failed. It's now starting to push back to the downside, okay? So that would be where I'd be looking for opportunities in the market on a lower time frame. How does that market form here? And like I showed you at the beginning of the video, if you go down to a 3-minute time frame, it does the same thing. The market comes into a level, it breaches, it makes new lows. That is what would get you into a position. Here right now, market, what's it doing? It's potentially about to make a new high. Do you want to be long though? That is the question you're going to have to try and figure out. You know, from a price action basis, yes, markets at daily support. We're at 4 hour levels confirmed there as well. We're starting to break to the upside. So what does that tell you? It tells you want to be long in this market, but that's only from a price action point of view. Fundamentally, do you want to be long? Absolutely not. Okay, and that's something you've got to be looking at within your trading as well. Okay, so that's how you can find a position in the market. You can go and use your top-down analysis, understand what type of market condition are you in. Are you in a range? Are you in a trend? If you're in a range, where are the key highs and lows that you can work with? If you're in a trend, where is the trend facing? Is it going down? Is it going up? In that case, where are the key swing highs and lows that are most obvious to you? If price comes back to those levels, can you look for trading opportunities on your lower time frames? Hopefully that all made sense, and if it did, leave it a thumbs up. I know it's a bit of a long video, and I'll catch you in the next one.